I gave up hats a while ago, but I feel like today was a special occasion.
What are you doing? Get that hat off your head, bro.
Why, you don't like
Stop it right now.
I feel young again.
Stealing some of the thunder.
What is going on, Crypto fam? Happy Monday, and welcome back to Sin City Crypto Live. I'm one of your co-hosts, David, and we are coming at you from our studio here in the city of sin, the city of wind and dust and allergies and sinus infections and all this stuff we don't like. If it's your first time checking us out, welcome. Nothing we say on this channel should be taken as financial advice, so please, as always, do your own research. With that being said, I introduce you to the man himself, your other co-host, Big Rob. What's up?
Hola! It's your boy, Big Rob, back in the house. Welcome to Sin City Crypto. If it's your first time checking us out, we are an entertainment-focused cryptocurrency channel where we take the old, the boring, the stale information, and we package it up in a fun and sexy way. Also, here at Sin City Crypto, we don't just do live streams. We also do deep dives, other content. Check out the deep dives, other content. And guess what?
What?
We got our boy in house.
Who?
Pull it up. We got our boy Jason up in here.
Hey, Q.
Jason Squires, welcome.
Welcome.
Welcome to the studio.
Hello. Windy City Crypto here saying hello live.
Appreciate it. He's like, you guys are Sin City Crypto. I think I'm going to start my own channel, Windy City. I'm like, we are now Windy City Crypto. Mm-hmm. Not the name of our channel.
Came in here with the merch on today, too, man, you know?
Yeah.
Got to represent.
Yeah, he came in with the merch. We gave him a pastry and some coffee. You know, that's how we do up in here.
That's right. And looks like we got a new member.
Oh, dang. Destroyer has subscribed or
joined our channel.
Joined our
as an
membership.
official member.
Yeah, as a level 2 hodler.
Hodler.
Eddie, we have a button that says hodler on there. Right in the middle. Right above member. Sorry, Rocco is taking the time off. There we go.
Hey!
There it is.
Welcome.
Sorry, we got
the hodler team.
What's his Rocco is on vacation. Well-deserved vacation.
I actually fired him. Remember, we talked about this on Friday.
And so, we got Eddie in the producer chair, and we always add new stuff. So, anyways.
You mean you.
Yes, that is correct.
Rocco will come here in the morning. Hey, guys, and I could tell the look on his face. He's just waiting. He's waiting for Robin to open his mouth. So, Rocco, come here. Let me show you what we changed.
All right. 19 people in the chat. You know, Jason did mention he wants to open up the club today.
Yes.
You know, what a better day to open the club.
40 people.
How much crap do we got to talk about today? Today's show might go a little long. There's just so much to cover. I mean, crypto is on fire. Wall Street's on fire.
In a bad way.
Celsius is broken crypto.
In a bad
way. It's absolutely out of control right now. So a lot of things to cover. We are going to talk about the straight extreme slide in Bitcoin. The lowest Bitcoin has been since 2020. You remember 2021 when the markets are heating up? Bitcoin hit 30,000. Everybody was FOMOing into crypto. Mm-hmm. And I remember personally being like, man, I wish I'd have got in 2020 when these prices were super cheap. Well, the chances now. We have rewound the clock, and you can get all of those juicy projects at a low, steep discount of about 90% off. So if you are watching the show now, if you are invested in crypto, if you are looking to accumulate right now, you are ahead of the game. You are going to make it in this world. And pat yourself on the back, because where others are fearful, you are tearful?
Fearless.
Fearless, yeah. I don't know.
Let's do a roll call before we get into the content. Marky Mark, first in the chat. Welcome, my friend. Handy, Brokioshi, AZ Chris, Sin City Crypto, Sir Babe. Why you loud? Robin.
Gang!
DFib, go ahead.
Oh, my boy DFib in here?
Yeah.
DFib, what's up, my dude? Hola!
Nashawn, Luis, Damn Daniel, our newest member, the Hodler, Destroyer 1911. And Patricio. Welcome to the channel. And of course, our friend Jason in studio. If you're ever in Vegas.
Can we call Patricio Patty Cake M?
No.
No.
I mean, that's up to him.
I don't know.
I would say no, Patricio.
Patty Cake M.
If you're going to do that, just do Patty Cake.
It's not as cool as DJ Karma.
He literally changed his name to DJ Karma. That's hilarious. Listen, if you're ever in Vegas and you're not a weirdo, you want to come hang out with us during one of our live shows, it'll be our pleasure to host you. Just let us know.
Yeah, Jason has passed all of the check marks.
Background check?
Yeah,
Sobriety
so
check?
he's not a weirdo. So there we go.
All right.
Anyways, man,
What do you want to talk about first?
dude, where do we start, man? Yeah, so we got, just to give you a synopsis, Bitcoin 30K now at 23,000. Lowest has been since December 2020. We also have the closure and the stop, halt all trading and transfers on Celsius. So basically, they've said, not going to work anymore. Basically, they just shut the whole program down. Are they going to reopen? We'll discuss that. And then we also have Ethereum. Lo and behold, they are more than likely going to delay the merge chain.
No way. I don't believe it. Show me the proof.
So, yeah, that's on the back burner. Now, they haven't officially said it. Well, here's the thing. They never officially announced a date for the merge. So, I guess they don't officially have to say it's delayed, right?
Well,
they never announced it. You're not really delaying it.
They're delaying one important, very, very key factor in this whole merge, and we'll discuss that during our talking points.
Also, Wall Street is on an epic collapse. And so we went from Thursday down 3.5%, Friday down 3%. Today, we'll let you know.
Hey, we got all the way up to almost 5% on the NASDAQ.
So, yeah, there's that. And then what else? What else am I missing, man?
Oil is down.
Oil is down.
But 0.7%.
There you go. All right. So without further ado, let's get into Bitcoin. So taking a look at my laptop here, we have Bitcoin sitting at $23,362. Flash sale, everybody. This is a once in a lifetime opportunity. Do you agree, David?
No.
You don't?
No. I think it's going lower.
Okay. Anyways, you're never going to time the bottom.
True.
Great time to buy. Yeah. So there you go. Can you buy it lower? Perhaps. I think it probably will go lower. But
3022.
What's that?
Patty Cake said it's delayed to 3022.
All right. Now, yeah, so it was only 3 months ago. We were at 39. We were at 45,000 2 months ago. And lo and behold, we have lost half of that in 2 months. So that's a big swing.
We are at a very, very key level on Bitcoin, and I will talk about that during the market.
The 23,000?
Well, I'm not going to tell you.
Oh, okay. Anyway, yeah. Stay tuned, everybody.
Stay tuned.
So, just to get back in here. So basically, we are trying to find our new level. We're trying to find support. We're trying to figure out where is the bottom. Is this the bottom? The thing is David nor I know where the bottom is. We can guess. We can assume. I still think that 20K is the golden number. I don't think we're going to dip under it. Maybe a day or two, but who knows? I think we could see 21,000. I think that'll probably be the lowest. That's my opinion. But neither I or David know. So what a better time than to dollar cost average if you're looking to get into Bitcoin. And what a better time to get in Bitcoin than when it's 50% off it was 2 months ago, 50% off where it was a year earlier this year. At the beginning of the, let's see, in January is 46,000. Basically, yeah, 50% off where it was there. And then, was this like 80% off its all-time highs? Something like that?
I'll tell you right now.
75% off all-time highs, something like that. I'm no mathematician here. And then...
we are currently 68% off our all-time high.
68%. Damn.
Yeah.
So, anyways, if you got cash on the side, not financial advice, not the time to be fearful if you got cash on the side. If you're holding a crypto, absolutely the best time to hodl right now. Because, I mean, what are you going to accomplish by selling right now?
Taxes.
Yeah, you're going to lose money, so you don't pay taxes. So yeah, I guess
if you made big gains earlier.
So if your mentality is to sell, think of it this way: if your mentality is to sell right now, then that mentality is telling you, I'm gonna sell now, I'm gonna buy in a little lower. It's either that mentality or it's I don't believe in crypto and I'm just going to get out now. I don't think it's going to bounce back. So first of all, the second case, if you're here watching our channel, I'm pretty sure that's not your feeling, right?
Right. Real quick, Robin, we have a brand new person in our chat. Will you say hello to our friend Dana Brooks?
Dana. Hola. Welcome. Sin City Crypto.
It's our first time.
Oh, nice. So yeah, obviously we believe in crypto. And if you don't believe in crypto, the writing's on the wall, man. Institutions are in, nation states are adopting it. Central banks around the world are using it to facilitate payments. Central bank digital currencies are on the horizon. Contracts are everywhere, basically incorporating it into mainstream finance. And the largest hedge funds in the world are offering crypto custody services. You can incorporate it into your 401k now through, Fidelity. And so there's little to no evidence that it's going to disappear entirely, right? And so with that said, the strongest, most secure asset, Bitcoin, absolute gold standard right now. So anyways, pulling the numbers back up here, taking a look at Ethereum. I was heavily going in on Ethereum on this downtrend. I probably got about a $1,400 average buy on this. So I'm a little low, but as I mentioned, man, you know, you're never going to be able to time the bottom. And if you have conviction and there's a project you want to get into, you know, just dollar cost average in now.
What chart is that? The 1 day chart?
Yeah, this is the 1 day chart. We'll take a look at the 7 day. I think 7 day right now is probably the most relevant. So a week ago, we were at 1,800. 1,800 a week ago or 3 days ago. Crazy, man. And then now we're down to 1,220. Quick question. No TA, just sentiment. Under a K this year, yes or no?
Depends on the merge.
I'm just saying. Yes or no?
I would say yes. Look, I will remain bearish until the macro starts to level out, or the ETH merge happens, or the Bitcoin halving comes. So I will be a bear until then.
I could see it, you know, because here's the thing: if Bitcoin falls, so I think Bitcoin will be testing the 20K support level. I think 21,000. I think if you lose another 10, 15, maybe even 20% on Bitcoin, Ethereum's going to lose the 1K. And at $900, holy dog crap. I literally don't know where else I'm going to pull money out of. I'm going to
told you the plan.
If
you
anybody,
don't want to listen to me.
If anyone is looking for a Chihuahua / Wiener Dog mix, I am letting it go for the low price of 1.5 Ethereum. That's lovely.
That's fucked up.
Wow. All right. So then taking a look here. Oh, man, look at the chart. This is the biggest gainers here. So the biggest gainers for the day are all the stable coins. There you go. What do you know? And then Decentraland is the top project. Only down 1.5%.
Hold on.
What's up?
Eddie, put the camera on me and Rob. Rocco's wife, we'd like to wish you a happy birthday from all of us here at Sin City Crypto. We're sad you took our main man away from us, but we are happy that he is joining you on your birthday. Happy birthday to Rocco's wife. We love you. Okay.
Grazie. Grazie.
You're not the Italian here, I am. Rocco, who's the fill-in Italian? Is it me or Robin? Please, I know it's me. Go ahead. Right. Anyways, go ahead.
We got Sir Babe up in the house. What's up, brother? Now, taking a look at the crypto bubbles. Well, no surprise here. All red. Biggest losers. You know what? This isn't even a good chart for the biggest losers. Let's see. What is bleeding out of control? Curve Finance down 25%. I think this has just basically, if you are a platform that facilitates custody, staking, look no free. We all see what happened when Terra went down. Any project that had an algorithmic stablecoin dumped. And so we see what happened to Celsius, which is a custodial / staking interest bearing crypto platform.
Lending.
Borrowing. and heavily representing institutions. And so another two platforms that fit that exact mold is Curve Finance and Aave. And lo and behold, both over 20% down. I mean, everything's down, but they're leading the pack here. And so,
just a disclaimer, guys, I would be very nervous to have any money in any DeFi right now.
here's the thing. If there's any recommendation I can make out here for you in these uncertain times would be to custody your own crypto.
Yes. I was hoping
Any
you were
platform that, I mean, maybe the only thing I would No,
just
I'm
don't.
not. I can't
Don't.
even say it,
No.
man. Not even Coinbase, because Coinbase it went out and said if they file for bankruptcy, your cryptos are crypto.
You just never
So,
know.
and
Very unlikely for Coinbase, but you just never know. You never know. I would have zero money in DeFi. I would be too nervous. Any DeFi, I don't care what it is. No money there. I would custody my own coins. And if you don't know how to use a hardware wallet, there's tons of resources out there. Or if you have questions, feel free to email us. And if we have time, we'll get back to you. But that's what you should be doing right now.
yeah.
That's the safest.
So yeah, man, it's ugly. You want to know where the crypto figure index is? 11.
It's about to come in way lower. When's the next one? 6 hours?
Yeah. The next one is 6 hours from now. You want to take an over/under on the fear and greed index?
We're both going to go under.
No, I'm saying over/under instead of number.
Oh.
What do you think? 8?
7.
I think we'll come in at 9.
I'm saying it'll be under 8.
I don't think we've ever. I think 9 was the lowest. Look here. This one, that was the lowest we've had since 2018.
You were going lower. What do you guys think? Are you guys with me or Robin? If you're a member, you can use our emojis. If you're not, just put R for Robin, D for David. I think it'll be under 8. Robin thinks it'll be over 8. So, what do you guys think? Jason, what do you think?
I'm not really sure, but I don't know if it'll go under the all-time low.
You don't think
just
it'll go
yet.
under 8?
I don't think so. It might be close, but
Okay. All right. Maybe it'll hit right at 8. Who knows?
All right. And then moving on to the Wall Street markets here. So, blood in the streets. There is extreme volatility. Extreme
the VIX is up
volatility.
17. Click on the VIX chart.
So
real
this
quick.
is the volatility index. Basically, the higher this is, the more uncertainty there is in the market. You don't want to see the heartbeat monitor here. You know what I mean? That's no bueno. And so this right here just kind of explains it all.
Go to. Okay.
So anything over, I think it's 25 or 20. No, anything over 20 is supposed to be danger. Be careful. Proceed with caution. A lot of uncertainty in the markets, and so we are well into the 30s. So yeah, that's be careful. The Nasdaq absolutely getting pummeled. This is now 3 trading days in a row with big significant losses. We'll take a look at the 1 month. Let's see.
Hey, Rob, will you hold on 1 second?
What's that?
We have a new person in chat, Drew. Will you just welcome her real quick and then.
Where's Drew at? Isn't loaded. Oh, there he is. Drew! Hola! Welcome. Sin City Crypto.
So he wants to know. He said, "Do you think our assets on Celsius will be gone forever?" I'm kind of freaking out. I'm not saying this to drag you along, but that is what we are going to talk about.
Yeah.
In the next 10-15 minutes. So if you got time, stay around. If not, we totally understand. Just go back and watch it. Go about 30 minutes in.
You
that's what I'm talking
know,
about.
we sat down. We've talked to the
Chief product officer.
the chief product officer, marketing directors, brand ambassadors. We've sat down in
Miami.
in Miami in a corporate setting with Celsius, and we got to bounce a bunch of questions. And one thing I did come away with is they, at face value, they seem like stand-up, good business people, right? They seemed honest. They were very kind, very transparent. Now, things have changed. You know, when people are losing money, people do oddball things. So I have high hopes for them. I'll put it that way.
We're going to talk about that entire scenario, what their options are, what they're doing. We're going to talk about all of that probably literally right after.
So new 52-week low today here. You know, I want to take a look at the 5-year chart. The 5-year chart for the
What,
Nasdaq.
Robin? Okay.
So this is the NASDAQ chart. So we
make it bigger?
at, let's see here. Give me 1 second. Perfect. So here we have where we're at now. We basically erased all gains that we've made since August of 2020. And so the big number for me here, or the key level to watch, is February of 2020. Why is that? Because that was the high for
Before the sea crash.
before the pandemic thing happened. And so as you see it here, so this is the run up. Everything was going nice and green. We were, doing well in the stock market, and then we had the pandemic closures.
By the way,
and then that's this mark here. We are pretty damn close to that.
By the way, if you're just tuning in, this is the NASDAQ chart.
And so that level is $9,577. And right now it's trading at $10,000.
We're going to be under 7K on NASDAQ.
So just to put that in perspective, now the NASDAQ is a little bit more volatile, and they've taken a little bit more losses than the S&P 500, but we like to focus on the NASDAQ because it does follow more risk-on stocks, which tend to, this NASDAQ has been more or less correlated, or has been more correlated than the other index funds in comparison to crypto, specifically Bitcoin. So pretty similar here with the S&P 500, just not quite as dramatic. So it's ugly, man. Now, some things that are going on here. So what happened yesterday was, first of all, the 2-year Treasury bond briefly flips the 10-year rate. First inversion since early April. Okay, what does this mean? I'm going to break it down for you in the simplest ways to think about this. You can borrow money for 2 years, and you can borrow money for 10 years. You say you want to borrow the same amount of money, and you either pay back a certain amount of interest rate on one versus another on another. So
You're talking about from the federal standpoint?
So yeah, for a two year versus, so the 2 year versus the 10 year. I got a chart here somewhere.
There it is, right there. Go down. Keep going down. There it is, right there. Yield curve.
Yeah, no. I know I had a better chart though. Let me see if I can find it.
Pretty much anytime the
So-
2-year flips to 10-year, it's a surefire sign of recession.
Yeah. So right now you're right around. Right now we're right around 3% for the. It's not even freaking loading right now, man. Bonds, 10-year. Oh, here we go. And it should be right here. Anyways, I can't pull up the chart, but you're getting around 3.5% returns on a bond for 2 years, and you're getting about a 3.5% return on a 10-year bond. So basically, if you buy a bond right now, you are going to make the same amount of money holding it for 2 years as in 10 years. So there's literally no point in buying a 10-year bond. That's where I'm getting at. Hey, you buy this bond, it will give you 3.5%. You got to hold it for 2 years though. There's literally no logistical. There's no logical answer to buy the 10-year, because if you're going to make the same amount of money on a 10 year as you would on the 2, that just shows you that nobody has confidence in the market at the moment in a long-term scale. Is basically what we're saying. There's lacking confidence in the market. Now, the Fed did say they're going to raise rates this week. So coming Wednesday, we're gonna find the answer out. So Wednesday's the big day. Wednesday, 2:30 p.m. Eastern time. So that is 11:30.
11:30.
Yeah. So Wednesday we'll be live when this comes out. And
I think this dump is part of the. We talk about pricing in, right? It's already priced in. What we're watching right now is, I think the market is literally pricing in the possibility that the Fed comes out and doesn't do a 50 basis point hike. They do a 75 basis point.
that's not gonna happen, man.
I'm just saying.
The market's dumping right now, so I think the last thing they want to do is just bottom this thing out. And right now, like if you are in Wall Street, you're freaking out, man. If you're a trader.
Why are you freaking out?
Because of how much red there is. If you're a day trader, what's causing is inflation. I understand that, but in the drop is because of the interest rate, and the interest rate is because of the inflation. So if you increase, so this right here, these numbers are all priced in for the expectation of a 0.5% increase, and so if you go and push it higher than a 0.5%. So you think they're going to put it at 0.75?
No.
He's been on record for the last 2 months.
No.
He's literally said a month ago,
Okay.
0.75 is off the table.
Okay, pay attention because I'm going to explain my reasoning, and I don't want you to twist my words. I don't think there's going to be a 75 basis point, but I think with the interest rates coming in higher on Friday, people are worried that he might walk back on that statement and actually do a 75. Do I think he will? No. But I think this is the market pricing in the possibility that he might walk back on his comment.
No, because
and go to 75 basis
all the
points.
article. I mean, unless you found an article that I didn't.
No, I didn't find an article. No. I didn't find an article.
Because look, I
don't think it's going to happen. I'm just telling you the sentiment, what I think Wall Street's doing. Because
the sentiment is he's going to do 0.5%. So, I mean, here on this article, every article I've seen some YouTubers talking about, well, maybe they'll put it with nothing to back it up. And so this right here is literally the culmination of ridiculously high gas prices, supply chain issues, and an absolutely absurd interest rate. I mean, inflation. And with the expectation of 0.5% interest rate hike this month, 0.5% the next month, and probably another 0.5% after that.
Here's why I got to my reasoning, right, about why they're pricing it in, is because the CPI numbers came out at 8:30 a.m. Eastern time on Friday, right? And what were the Friday numbers? They weren't as bad as what it is now, yes? So my thinking is, right, I like to think like the trader, the person on the other side executing the trades. I see these numbers. They're 30 basis points higher from April. I'm calling my financial advisors and saying, hey, I'm freaking out. What are we doing? And then in return, the financial advisors are moving money around, taking it out of equities, putting it more in bonds and cash. I think that would have already happened. And what we see today would have already happened if it wasn't in the moment thing. So that's why I think what we're seeing now.
It's just a larger sell-off, man.
I think what we're seeing now is people trying to price in possible bigger rate hike. But I could be wrong. Who knows? Do I think we're going to get a higher 75? No.
I think the smart people on Wall Street, they know it's going to be a 0.5%. And I think that's what this is. I mean, I don't know. I just haven't heard anything about 0.75. The only thing I've heard was that we were going to put the brakes on the interest rate hikes after 2 months.
That's not happening.
And I think that's off the table. So I think that might be more or less why the 10-year Treasury bond is down, because people are like, we're going to keep raising interest rates for probably the rest of the year. And going into a 4% interest rate, 5% interest rate, we're at 0.75 with a 5% home mortgage right now on a 30-year fixed rate, and which is way above where we were before all this interest rate.
Ideally, as the Fed, if you're trying to tackle high inflation, you want your Fed fund rate, your interest rate, to be at or above the inflation rate. So we're talking 8.6%.
Yeah, that ain't gonna happen.
Imagine, I don't know if they can go that far.
I think 5.5%, 6% will be the cap.
Which would mean mortgage rates
will be about
15-20%.
Yeah, probably 10 to 12%.
You'll
You'll probably get better returns on savings accounts. So historically, if you look back at banks, no, honestly, because banks borrow money.
I'm thinking like, what is it, like a 0.25%?
Banks borrow money from the Fed, and if they're borrowing money from the Fed at 6%, then if they can get a 2% from a retailer. Their customers, they'll do that. And in the 80s, they had savings account at over 5% for that reason. And so you might be able to get a 3 to 5% interest rate on your savings account.
Are you high?
All
right.
If
don't lose credibility, bro. There's no
if the federal interest rate goes up to 8%, for example, you could see a 3 to 5%.
You are out of your mind. What? Oh, okay. Hey, you.
It's It's not about
Are you
the
listening
banks.
to this?
It's not about the banks doing what's right
3
or
to
what's smart.
5%.
No, I'm just saying that like
It hasn't been like that in a long time.
if they want to, if they can borrow money, if you're a bank, say you're a CEO of a bank, and you're like, hey, we can either borrow money from the government at 8%, or we can entice people to put money in their savings account, which is pretty much borrowing money from their members, and we can do it for 3-5%. Telling you. Now, taking a look back at
You're crazy.
back to my laptop
crazy.
here. Asian markets are also down over 3%. That was this morning. And then, so talking about inflation, here's a little lighthearted subject here. Inflation doesn't seem to be stopping.
Inflation and lighthearted?
So inflation doesn't seem to be stopping the Budweiser drinker. So
Yeah, because they're drinking their sorrows away.
Anheuser-Busch CEO has came out and said their profit and losses are looking nice and green. Yeah, look at this guy right here. Look how happy he is. That's a happy man.
That's
right?
not a-
He's
yeah,
not.
he's happy because he's drunk,
he
and
is
he's drunk
not
because his
concerned-
money's gone.
He's
His
not
money's
concerned
gone
about
because of
inflation.
inflation.
And look at that badass
That's
big
why he's
American
drinking
flag.
Budweiser.
Thank you.
Who
Thanks.
the hell brings an American flag this big to the beach?
David.
That's right.
U.S. and they.
Anheuser-Busch is only down 1% compared to the 14% of the S&P 500. So people are enjoying their beers right now. I haven't seen as much inflation on the beers as I have, like, say, the food. Because, you can still get your 12-pack for, like, what is it, like $11 now?
I don't drink beer, so I don't know.
Anyways. Also, who else is getting rocked right now?
Rob minus 500. Eddie, you're hired. Are you worried? Okay, are you worried Coinbase can go bankrupt? I'll be honest.
I'm not worried. Is it possible? Absolutely.
Anything's possible.
Yeah. I
Here's
think
what
it's unlike, if I had to put a percentage on it, I'd probably put it at like 8%.
Guys, here's the benefit, okay? Here's the benefit of Coinbase being a publicly traded company, okay? There's a few benefits. The first benefit is they can issue more shares and raise more money. Second benefit is they are the American leader in cryptocurrency exchanges. So I think it would be unwise for the federal government, the central bank, just, the government in general, to let Coinbase fail. I think they're already seeing crypto as part of America's future, part of investors' future. They know how many people have money invested in Coinbase.
So what you're saying is if they go under, they're going to enable quantitative easing and inject money into Coinbase when they're trying to tighten.
I think it would be a scenario where they would look into it and seriously consider bailing them out. I really do. Or they would get bought up by another company. I don't think they're going to go bankrupt and everyone's money is going to go bye-bye.
No,
it's
man.
a possibility. It's always a possibility. But
the government is not bailing anybody out right now. And there's tons of red across the board. There is tech company after tech company. If they're going to bail anybody out, it'll be like Elon Musk. They're way down, and they have partnerships with the government. This is still an emerging market, and if anything, I think there's a lot of people in government that would praise the bankruptcy of Coinbase. That way, they can have that aha, I'm right moment.
But they're a publicly traded company.
But they are literally doing quantitative tightening. So not only have they stopped injecting money into corporate businesses, so the quantitative easing, which we had all throughout 2020 and throughout 2021,
and
that has
throughout
stopped.
2010 and 2011.
And so basically, you're just buying up corporate debt. They're basically saying, okay, you're in debt, you're struggling to stay afloat. Here's a bunch of free cash. Or here's a bunch of cash you need to pay back at 0% interest. And that's what we've been doing for the last 2 years at an accelerated rate. And we just stopped that. And so I don't see them reversing course, offering out basically free money and turn the money printers on to bail out a speculative company that most people in Congress don't like anyway. So that's down. You know who else is down? MicroStrategy. 23%. They opened up 23% down today. So right now, not a good time to be in crypto. If you go to work, I'm sure somebody's going to be like, hey, how's that Bitcoin treating you, bro? Everybody always want to say something when crypto's down. You know what? Well, you just wait. When it says roars back, your boy over here liquidated everything. I'm all in on Ethereum. And this ad right here. Get out of here. And so I'm all in on Ethereum. And when this thing pumps, bro, I'm going to be back in everybody's face. I'm like, what's up, bro? See that new Mercedes outside? How you doing? So there you go.
We got bills to pay, bro.
That's right. Now, that's all I got. You got anything else to add?
I would watch that yield inversion. That's that's a very key indicator. Now, I think we're already in a recession, in my opinion. And like I talked about on Friday, the recession is the best case scenario we find ourselves in.
I think in the next few weeks we'll be either. I think it's next 2 weeks is when the
GDP numbers come out.
Yeah, so we'll officially be in a recession if we stay the course in a couple weeks.
Do you think we'll come in at a negative or at a sub 1?
I think we'll be negative, man.
You think we'll be negative? I think we'll be sub 1. Like 0.5, 0.6. I don't know. We'll see. We'll see. But 2 quarters in a row of negative GDP growth, you're technically in a recession. So, all right. Let us move on to our next segment of our show, which is the hot take.
It's hot.
So we all know what happened with Celsius. They halted all their withdrawals, their swaps on their platform, citing extreme market conditions. So the hot take is this. Was the Celsius pause the right move? I will go first. The answer is yes. Okay. Am I agreeing that?
What?
Yes.
Tripping, bro.
Do I think it should have happened? No. Do I think Celsius should have better positioned themselves so they didn't have to do what they did? Yes. But all things considered, right? Can't go back in time and change how they invested your money, how they invested their own money, what projects and companies they put money into. But what you can do, look at the situation you have in front of you. If they did not pause the withdrawals and the swapping, that company, that project, and everything inside it, all of your money in Celsius would have already vaporized, would have gone. It would have been bye-bye. So what this pause allows them to do, and I get it. I saw on Twitter some people were saying, hey, I got bills to pay. I got to pay my mortgage. But first of all, okay, I know this is after the fact, but you should never be putting in money that you're not willing to wave bye-bye to, okay? So that's number one. Number two is if they wouldn't have put a pause on it, then not only your money, but everyone else's money would have been gone. Would have been gone. And it is all the fault of Celsius. What they did with the money, the business practices they had, it's their fault. We get it, right? We're upset with them. But this was the right move. This was the right move. It allows them time to catch up, to move money around, to try to bring more liquidity in. Maybe they're going to try to raise some money. Maybe they're tapping into funds that they weren't planning on tapping into. Maybe Alex Mashinsky is pulling money out of his own savings account. But it was the right move. Should it have happened in the first place? No. But in the current circumstances that Celsius finds themselves in, it was the right move. It was the right move. At least now you have a chance to get your money back.
So here in Las Vegas, it was about 2.5, maybe 3 years ago, we legalized marijuana. How high are you right now, David? I mean, what are you talking about, bro? Like you're trying to justify a platform shutting down and blocking all of their users from access to their own account. It's absolutely absurd. And yes, maybe you can make some case, be like, well, they messed up, so now they have no choice. But no, that's not the answer. You know what? You write that thing all the way down to zero. You let as many people exit and take their money out, and don't try to preserve your own wealth. And you're over here talking about Alex Mashinsky might be moving money from his savings account. Get out of here. You think that man is moving money out of his savings account?
So you think it's better for them to let the bank run just keep going? And the tail end investors are essentially
you
fucked.
know what?
Is that what you're saying?
At least there's a smaller percentage, because you know what ended up happening? When they open that thing up, it's going to be an absolute pandemonium. It's going to be like Black Friday. Doors going to pop open. Everybody's going to be rushing in, trying to pull their money out. You know what? I think you've done the exact opposite of what you were trying to accomplish, because now the entire world is looking at this, and the entire world is waiting for you to open up again. And when you do open up, every person that has money in there, like, I mean, look at Drew. How excited would you be if you opened up and you had access to all your money? What would be the first thing you do? He would
try to take his money out. But
Yes,
what would every other person try to do? Take their money out. And then when there's no liquidity, what
here's the
happens?
thing. So-
Drew is fucked.
So listen here. What I'm saying is that you're going to have a race to do it. And literally you're going to collapse the Celsius network for whatever's left of it. At least if you would have just let it happen platonically, maybe they could have, maybe some people still would have had faith. Some people would have still kept their money there. Maybe it would have been enough to keep it alive. They could have maybe did some last minute funding. They could have maybe leveraged or borrowed on something. But the thing is at this point, there is no saving Celsius. And
You're wrong.
There is literally no chance.
You're wrong.
Okay, if you had money, let me ask you a question. If you had money in Celsius, David, would you pull your money out the second they open it up?
Absolutely.
Then every person will do the same thing.
I get it, but at least
that's literally the definition of collapse, bro.
But it gives
literally
them
the definition of collapse.
It gives them time to get their ducks in a row, if it's even possible.
What ducks? Quack, quack.
If it's even
Motherfuckers
possible.
out here with shotguns just shooting them ducks down, bro. Get out of here. Literally the second they open that thing up, anybody with the internet connection is going to liquidate their position.
Yes, but there might be more liquidity on the other side.
Where?
Because
From
What do you
where? Where is this liquidity coming from?
am I a Celsius representative?
Well,
You're
let
not
me tell
either,
you,
so we
you
don't
need
know.
to be a Celsius representative.
But I'm sure they have.
If 99% of the users take their money out, bye-bye.
If the liquidity is there, it won't matter.
Bro, Drew, all
Right
I'm
now,
saying,
if they open the floodgates, the liquidity is not there. Then yes,
well,
it would tank.
Here was the thing. You had at least a chance or glimmer of hope beforehand. Right now,
Right.
Look, Drew, this is what I would recommend. You have fiber optic internet, bro, because you're gonna need to get in there, and when they open that thing up, you need to be ready, bro. You need to be ready. Drew, the second that thing opens up, you need to be like, withdraw, because you're probably gonna have a window of less than 20 minutes, you think?
Probably less.
Yeah. So what I would do if I were you, Drew, I would follow Celsius on Twitter, and I would make sure you have your notifications on, and you turn the vibration on, and you turn the sound on, and you wear AirPods, because when they open that thing up, you need to access your account instantaneously and withdraw, bro. Not financial advice, but that's what I would do.
I don't know if it's a bad situation to be in. It should have never been in here in the first place.
It shouldn't have been there. It shouldn't have been there.
And it's their fault. It's their business practices, you know. Mr. came out and said, we don't sell any under collateralized loans. We don't take people's collateral and reinvest it. And that is exactly what they did, on top of, you know what? Pull up my laptop. Let's just go over this now since we're on the topic. So this kind of, this article from Blockworks, Celsius lending platform suspends withdrawals and transfers. On June 12th, they'll be pausing withdrawals, swaps, and transfers between accounts on this platform due to extreme market conditions. We are taking this action today to put Celsius in a better position to honor over time. Okay, over time is the key word. Its withdrawal obligations, and the decision was made to stabilize liquidity and operations. There is a lot of work ahead as we consider various options. This process will take time, and there may be delays. No. And here's a key part right here. Celsius had a position of about $1.5 billion in staked Ethereum, which, quote, raises concerns that if clients try to redeem positions, Celsius will run out of liquid funds to pay them back. They could run out of funds within 5 weeks. So what happens is, they sell contracts on their staked Ethereum, right? Futures contracts. And now people try to cash that in. What you would normally do in let's say a spot ETF, you would go buy the same amount of Bitcoin that people are buying from ETF. And the same thing with this part. People want to cash in their staked ETH, then you have to be able to access that ETH to pay yourself back because you're paying out of your account. Well, they don't have access to the staked ETH. They can't have access until the merge happens and then add another 6 months on top of it. So this is bad. But I'm telling you, pausing the network at least gives them time to look at their options, okay? Everyone calm down. Let's figure out what we can do. Maybe we do certain percentage rollouts, right? If your wallet holds this much, you can pull out 100%, or these people go first, or institute. We don't know. We don't know what they're working on. We don't know. And on top of that, You have Nexo, right? Nexo is very similar to what Celsius does. And they tweeted, after what appears to be the insolvency of Celsius Network and mindful of the repercussions for the retail investor and crypto community, Nexo has extended a formal offer to acquire qualifying assets of Celsius Network after their withdrawal fee freeze. So you have companies like Nexo coming in and saying, hey, we'll buy up some of your obligations, right? Your qualified obligations. This is just one thing, right? And so I think, I'm not saying Celsius will survive in the long term, but I think there is a chance with this pause that they can figure something out and get people a majority of their money back. Drew, would you be okay with getting 80% of your money back versus 100, or even 60% of your money back versus 100, or 0? I'm pretty sure the answer is yes. And that might be the best case scenario, which still sucks, but at least you didn't lose everything. So, oh, and then another thing I want to show you. So this is a tweet from June 11th, so 2 days ago. Mike Dowdas, no clue who he is, said, I hope retail can get out, talking about Celsius. I've been hearing about accounts locked. That would be similar to Luna. We shall see. Which Mashinsky said, Mike, do you even know one person who has a problem withdrawing from Celsius? Widespread FUD and misinformation. Well, it wasn't FUD and misinformation. It was true. And we are going through it literally right now.
So, you know, it's interesting. So here, pull up my laptop real quick. I just want to show you something here. So this is the price of Celsius. It did rebound a little bit. It was down 18 cents yesterday.
I think it got down to 9 cents.
Didn't it?
I believe.
15 is the lowest I see it here. So I was looking at the chart, and I happened to scroll down here. And I don't really ever pay too much attention to it. But man, this is when I knew that things aren't looking good for Celsius. So here you have another Luna. People can't log in. You stole our money. Ponzi collapsing. Can't withdraw funds. Can't even log into my Celsius wallet. You got a good long opportunity now. Definitely not. So then you got I think Celsius did what it had to do. Rug pull. Physically, mentally, and emotionally prepared. Not prepared. Celsius is dead. Sell, never return. Like, this is all POS is man, it's just all Luna over again. Fraud. This just shows you. That's why the community, nobody has faith in it. And so when everybody, when these users get a chance to access their money, I literally don't see a scenario where cryptocurrency, where Celsius can come back from this. Because the second any of these people have an opportunity to exit, they will. And there's not enough liquidity on they have so much locked up and staked ETH, they can't unlock it. And so they don't have enough money to pay everybody back. That's the nuts and bolts of it.
I would implement something like being laddering people out, letting people ladder out of their positions. I mean, look, either way, it's not right. Okay, I'm not disagreeing that. I'm not saying it's right.
I just don't see how they could physically do it. Because the thing is like,
put a limit on the, because they custody your coins, right? So they have control of your money. So they can say, okay, this wallet you can ladder out 80%, this wallet 60%, and I don't know how they're going to do it.
It seems because they have so many different assets.
Yes,
like, it seems overly complicated, and I'm not saying it couldn't be done, but I don't know. I don't see it happening, man. I think, my personal opinion, I think they're going to let this ride for a week or so until it's not so much a big story. They're going to open it up, and then they're going to be surprised to see that everybody exits. Okay, go ahead. That's all I got there.
This is something I tweeted. Will you pull up my laptop, Eddie? So we tweeted this on our, it's not letting me, well, let me see if I can just do this real quick. So we tweeted this out yesterday, okay? So I decided to go into the Celsius terms and conditions, and in it says, if you missed it, make sure you go follow us on Twitter, by the way, at SinCityCrypto1. In the event that you, Celsius, or any third-party custodian becomes subject to an insolvency, which means essentially they can't pay their debt back, their obligations back, it is unclear how your digital assets will be treated and what rights you would have to such digital assets. You explicitly understand and acknowledge that the treatment of digital assets in the event of such an insolvency proceeding is unsettled, not guaranteed, and treated as an unsecured creditor and or the total loss of any and all digital assets reflected in your Celsius account. So you saw this with Coinbase, where someone found this in the terms and conditions. This is what it is across every single platform right now. Anything in crypto. If you have cryptocurrency, you have coins, or you have a custodian holding it, your money is considered unsecured debt, which means that if they go bankrupt, they declare bankruptcy, they have zero obligation to pay you back. Zero. That is why I'm saying right now, me personally, I would be too scared to have any money in any DeFi protocol. I don't care if it's been around for 10 years, 20 years. I don't care. The 10, 12% yields are not worth the risk of something like this happening. And Celsius was not a small platform. They were big. They had a lot of people investing in it. And we see this happening with this. We saw it happen with Terra Luna. We see it happening with this. There's talks about Coinbase. It's too risky right now with the market conditions, with the macroeconomic conditions. Better safe than sorry. When things are bullish, when everything is going good, great. These companies are making money. They can afford to keep paying you 12%. They're making money on their investments. But right now, right, that 12% they're paying you, where is that money coming from? It is coming from their pockets, from the investments they're making. And the profits from those investments, they pass it down to you so you can continue to pump money into their network. When they're not making money because the market is down, guess what? How are they going to sustain 12% interest? They can't. They can't. And so proceed with caution. If it was me, I would not have any money in any DeFi right now. Just set it aside. If you want to hold it on an exchange and you're worried about that exchange going bankrupt, hold it in USD. Don't hold it in stable. Don't hold it in Bitcoin. Hold it in USD because USD, you're FDIC insured. If Coinbase goes bankrupt and you have $10,000 in cash, dollars on Coinbase, you will get that money back. If you have it in Bitcoin or stable coin, you won't get that money back.
All right, what else we got?
All right, let's move on. Our next segment, the talking points. All right, let's talk about some ETH news. Now, we all know, we knew a delay was coming. But here's what the important thing that's being delayed. We talked about this. You can pull up my laptop, Eddie. The difficulty bomb delayed, but network adoption is still growing. Ethereum network developers have decided to delay the difficulty bomb, which is a major step leading up to the highly anticipated merge upgrade for the Layer 1 blockchain. If you're not familiar with what the difficulty bomb is, essentially it makes mining Ethereum on their old proof of work chain essentially worthless. So there is no incentive for any miner to mine Ethereum on the old chain, the proof of work chain. So the idea is you have them migrate to the new chain and that solves that problem. Well, that was supposed to happen, I believe, in July or June. And Robin can fact check me on that if he wants to.
So what it is the difficulty bomb was supposed to start. It's not a flip of the switch.
Right. It's gradual.
And so it was supposed to start in like 2 weeks. And it was on track for an August for sure rollout, even as early as July.
August, yeah.